and welcome to this Wednesday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Andrew Cox with a shipper update. But first, we're going to go Zach Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Carrier Update presented by PowerFleet. I'm Zach Strickland. So it's the Wednesday before Thanksgiving. So effectively, shippers have already pushed a lot of their freight off until next week. We're looking at our outbound tender volume index here with the tender lead times, and we can see that tender lead time there in the orange line spiking yesterday as it jumps all the way up from about 2.75 or 2.7 all the way up to just under 3 days of lead time. And that is an indication that shippers have started to make plans for next week. They know that they're not going to get a lot of capacity this week. You know, you got Friday, which is a very limited operation schedule for a lot of carriers out there, so a lot of lead times. But you look at our outbound tender volume index, it shoots up as well. This is a lot of preparation for next week. So that means that a lot of freight is going to be piling up and ready to go the start of next week as everybody returns back to work, whether it's from home or the office or wherever it is. And then docks are going to be fully loaded and ready to go for early next week for our tender volume index. So let's see what that spike in tender volumes did to our tender rejection index. Well, it didn't do a lot to the tender rejection index, even though we're still at historical highs. 28.2%. We came down just a skosh, 0.12% yesterday. You know, that means that carriers are obviously willing and ready to go for next week, a little bit more so than they would have been. So the fact that we probably have peaked out here for tender rejection rates for the Thanksgiving supply side situation where a lot of drivers are off the road, they've made their vacation plans, they've gone home, or they're getting to where they need to be. Tender rejection rates remaining relatively stable at a very high level of rejection so far. So again, we don't have a lot of volatility right now. I think everybody is basically shut down for the holiday. We're not making a lot of arrangements to get things done here over the next few days. Capacity's already cleared out of the market, more than likely. Anything that's going to move on Friday has already got plans to move. So looking at our weighted rejection index, where might we see some of this instability to start the week? So here's where you're going to see the biggest changes in our tender rejection rates week over week. These are going to be the areas also, again, keep in mind that a lot of this freight that they tendered is for next week. So these are going to be the markets where you see the biggest change in tender rejection rates depending on the market size as well for next week. Looking at our WRI, weighted rejection index, we've got Allentown and Harrisburg, Pennsylvania, up there around the megalopolis. This has been one of the hottest spots of the country over the last several days or so. The Northeast started kicking again. A lot of short haul freight up there. Carriers, I know you don't like to go into these markets, but keep in mind that these rejection rates are an indication that you're probably going to get pretty decent rate for it. Even though we're looking at a lot of truckload minimums, you can get a few extra dollars and you're going to have a lot of chances to keep moving up there. You might get stuck in that corridor going back and forth between the DCs and the final destination, but if you do it right, you can manage those minimums, you can keep your wheels rolling very efficiently. You can make a couple of runs a day. Keep in mind your hours of service, obviously. And then we're going to have the rest of the country. We've got the weighted rejection index in the Kansas City area, right around Joplin, Missouri as well. We've got a little bit of instability there. It's coming back down, though, after we saw a significant decline in the tender rejection rate in the middle of the country. This was one of the hottest spots of the country here over the past few weeks in the middle, as a lot of carriers were avoiding that middle section. And then, of course, out there in Atlanta, Georgia, still a high-rated rejection index, along with Dallas as well. The West Coast remaining slightly cooler than expected. So Christmas tree season has come as we got Seattle rejection rates spiking here over the last couple of days at 17%, 17.4%. And then we've got our, a lot of this freight is going to be around that tweener rejection index, so 450 to 800 miles in general. So keep in mind that anybody going into Seattle right now, you might have a little bit better chance of capturing some of that freight as, the tender rejection rates go up. They're hauling Christmas trees or whatever else they're going on up there, holiday, etc. So Seattle, not as bad as it used to be. And that'll do it for today's Carrier Update. Have a great
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello, welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
And we're going to talk a little bit about consumer sentiment and the consumers' expectations for their holiday spending. So this is the University of Michigan Consumer Sentiment Index. We got the data, the preliminary data, late last week. We're going to get the full number today. It comes out at 10 a.m., so I'll be looking forward to that. I think that number might even get revised down a little bit. But in any case, we did see, after a flat from September to October, we kind of saw consumer sentiment stay flat. We saw that fall five points from October to November. And I'm not too worried about this consumer sentiment faltering ahead of the holiday season, and there's two reasons. One of the reasons are that these sentiment indexes are made up of current conditions and the expectations indexes. The current conditions stayed pretty stable. People didn't expect things to change much through the end of the year. It's that 6-month outlook that people are seeing as more negative than they did prior to that. And there's two real reasons to that. One of them is the election, and this is what the University of Michigan said was the main driver to bring the consumer sentiment index down was the election. We saw Democrats kind of stay stable, and we saw Republicans see that the future index go down. So there's the disparity there. And then the other thing is just COVID. We know that the coronavirus and consumer sentiment have an inverse relationship. As COVID cases rise, we see consumer sentiment fall. That's exactly what's happening right now.
Got it. So half the country, a little bit less optimistic when we're going into the next 6 months. Similar to the consumer confidence index from the conference board that also moved down a little bit in this most recent release. But as you mentioned, a lot of correlations between COVID cases and consumer confidence. Do you know what kind of impact that's going to have in the holiday shopping season?
Yeah, well, this is some great data from Bank of America. So here is the fear, and here is kind of the reality right now. So the fear is that these is broken down by COVID hotspots and the rest of the country. So a blue line being the virus hotspots. It's the top 100 counties by infection rate. You can see that in the beginning of September, brick and mortar, or the beginning of November rather, the brick and mortar spending faltered. It fell big time, back down to about -8% year over year. We've seen things pick up a little bit as people get out and shop for Black Friday deals and Cyber Monday deals. A lot of companies are rolling those out throughout the month of November. So we've seen some brick and mortar spending come up, but we flatlined again here at about -4 or 5% year over year. But the good news is that we've seen total card spending stay pretty strong. That means people are spending more online. They're replacing some of this brick and mortar spending with online spending, which is good for freight. This is a good thing. We see that the percentages, both COVID hotspots and the rest of the country, are up in the 8 to 10% range year over year total card spending, and that's a good sign.
Right. I mean, e-commerce has definitely been a trend that's been hot throughout the entire year, and definitely one of the areas I think that's going to be successful as we kind of get throughout 2020 and into 2021. I think another area that was a positive subsector was retail sales for building products as well, along with housing just generally being a strong market. Yeah, the housing market is impressing everybody. Seth and I spoke about this on Great Quarter Guys yesterday. He actually says that it's almost reaching the point where he's getting a little bit worried, and I'd like to hear your thoughts on that. But that demand is so high, and there's so many houses trying to be built that we may kind of overshoot our supply target here moving into 2021. But right now, rates are low, the demand is high, people are leaving from cities, and that helps freight as well. People buy houses, they have to buy appliances and furniture and everything else to fill the home. But I do want to get to one last thing before we shut off here, and this is just some data from Nielsen that the Bank of America put out. This is just expectations for spending. So you can see 2020 in blue, 2019 in yellow, and this is compared with last year. How much do you expect to spend for the holidays? So you can see that there is fewer people expecting to spend more this year than last year, and less people expecting to spend the same. So I've seen a lot of research that says most people are actually expecting to spend about the same on other people, but it's themselves that they're going to spend less on. I've seen they're going to spend on average about $50 less, down from about $1,100 to $1,050. You don't think that that's a big deal, but it is a big deal. I'm still expecting consumer spending and holiday sales to be up in the low single-digit range, but COVID-19, potential shutdowns, economic harm that we saw in Q2, it's definitely lingering. Andrew, thank you so much. Insightful as always. We appreciate it. And thank you so much for tuning in. That's going to do for this Wednesday edition of FreightWaves Now. As always, the content doesn't stop here. You can check out all of our FreightWaves content on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in. We'll see you on the next episode. Happy holidays.